Good afternoon. We're taking a look at gold, and as you can see, yesterday gold made highs of 1689. The world is calling for gold going to the moon, and this morning it's like, well, maybe not, as it comes down to 1632. Now, if I put on a little Fibonacci, I'm going to put on a baby one. I'm going to take it from that point there up to yesterday's high, and you can see if I scroll it out, I put lots of things on these charts, but look, you know, we bounced off the 38.2 at 1634, and low has been 1632, but you can see where I'm going with this. The market did retrace, but it held some really good support, and don't forget that's all it had there. If you look at that 38.2 fib, there's nothing else really in that vicinity. So 1634, you're obviously going to get little Johnny come latelys that want to sell below levels and buy above them. We know that, we expect that, so we don't take a lot of notice of that one. Now, gold is in an uptrend, obviously, has been for many months now. It does have pullbacks, but as long as it stays above certain criteria, certain support levels, we're quite happy to continue to buy into weakness. I mean, there is no point going against a trend. There really isn't. So, as it dips down, as you can see, there were buys in at 1634. Up we go. We're now trading 1651. Now, we've got to get past that 23.6, so we need to get above 1655 and stay above it. Okay? Now, so far, we've had a high of 1660. We want to take that out. We want to go back, and we want to test yesterday's highs. If we can do that, yes, it'll be a smallish double top. Nothing that I wouldn't expect, and I wouldn't sell this one because it's too short term. What you wouldn't, if you wanted to sell a double top up at that area here, up at that 1689, what you'd be doing would be waiting to see a sideways move, so it would oscillate between 1634 and say 1665, 1670, go sideways, and then sell if it reached up here 89 in a few days time, a week. The thing with the gold market at the moment is it is looking overbought, and it is looking to turn. Now, that doesn't mean to say that the bull runs over. It's not that at all. What it means is that for the moment, gold is overbought and it needs a correction. Now, if you can see the fact that we've seen the dollar weaken this week, okay, so everybody was calling the euro down to like 0 last week, and now going, do you know what? No. So we didn't break parity in the dollar index chart. We didn't break the dollar index resistance at all, up there just under that 100. So we're trading currently 99.20-ish. So dollar index is down, dollar's down a little bit. Gold has been its own master. It hasn't followed the dollar. In fact, it's gone the same way. As the dollar strengthened, gold strengthened with it. So because we're seeing this dollar weakness, that doesn't mean to say that you're going to see dollar strength. You know, we could see dollar weakness as well, gold weakness as well, which we've seen today. But just watch that 1634. If we do take out 1630, you know underneath it we've got 1617 to 1611. You've got the 9-day moving average coming in at 1613. So there is areas of support at lower levels. Big level is 1604 to 1601. There we've got the 61.8 and the trend line. So that's what I'm going for today. Right, any weakness in gold, I'm a buyer. Okay, good luck, and I will catch you all on the desk in a bit.